Welcome back to the channel. In today's video, we're going to break down and react to a very interesting interview clip that just aired on CNBC that talks about Warren Buffett of Berkshire Hathaway pushing back and responding strongly to Trump's false report about him on social media. After you've watched the video, I'll walk you through exactly what's going on here, what was said, what it means for the market, and of course, what we can learn from Buffett's ongoing market strategy. If you only watch one video today, make sure you watch this one all the way till the end. Hit the like button, let's get 1,000 likes on this one, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's check out the CNBC interview.
We're back with more breaking news. Our Becky Quick joins us now on the phone. Bex, what do we know?
Hey, Scott, just wanted to let everyone know that Berkshire Hathaway is now responding to a post that was reposted, a video that was reposted on Truth Social by Donald Trump this morning. The president put out or reposted a post that was originally posted on X yesterday by a user named American Papa Bear. He put out a video saying that Trump is playing chess while everyone else is playing checkers, saying that President Trump is intentionally crashing the stock market because he wants to see lower interest rates and many other things that he thinks will come from benefits that would come from that. As part of that video, it included some video of Warren Buffett with the proclamation that Warren Buffett was saying that Trump was making the best economic moves he's seen in the last 50 years. Berkshire Hathaway responding to that this morning, saying that reports that are currently circulating on social media, including Instagram, TikTok, Twitter, all such reports are false. It was a very brief statement from Berkshire, but I have just spoken with Warren Buffett. He says the reason that he is putting this out is he wants to make sure that in an age where misinformation can be blasted around instantaneously, that they are very alert and critical and making sure they're knocking down misinformation. He says that he's not talking to anybody about anything related to the markets, the economy, or tariffs, and that he will not be doing that between now and the annual meeting for Berkshire Hathaway, which takes place on Saturday, May 3rd. On Saturday, May 3rd, 8:30 a.m., they will hold that annual meeting that typically draws 40 or 45,000 people, maybe even more. Lots of people who will be watching. Will be broadcasting it not only on CNBC, but on CNBC.com. But he will be taking questions from shareholders at that point. But he wants to make it very clear that anything you see purportedly on social media coming from Warren Buffett about the markets, about the economy, about what's happening with tariffs is not from him. He will not be making any commentary on that between now and the annual meeting on Saturday, May 3rd.
Let me just follow up with you, if I could, Becky, because nobody knows this man and his investing prowess over the last decade, at least, as you. It seems clear to me that they have maneuvered their way through these choppy markets better than most. They're up 11% is Berkshire year to date. A lot has been made of the fact that they've been sitting on a mountain of cash, and when the markets were at the highs, they couldn't find really anything that looked attractive enough to them because of the fact that so many things were at high levels. They had taken down some of their positions in Bank of America and Apple, for example. I'm just wondering, from your own insight, what you take away from the fact that they have been able, and he has, which is why he is the oracle to begin with and the greatest investor who's ever lived, to maneuver their way through times of turbulence, and what you think it all says about what is happening at Berkshire Hathaway now.
Well, look, he has done this in the past, said that he's going to be very patient, look for the slow pitches. He doesn't mind doing nothing for years at a time if that's what it takes. And that's certainly what it seemed like recently. He'll say that he won't be able to time the market, that's not his game. But he knows when stocks look expensive, and he knows when things look like bargains. And my read on this, at least, of the 330 billion dollars that they've amassed, that's sitting around $300+ billion, is that, yeah, they're waiting for the slow pitch, ready to be doing things. And when you start to see activity like we've seen, where stock markets start to drop, with the S&P down 12% or 12.25% as of yesterday's close, then add on the losses from today, sure, I would imagine that things start to look better at those prices. But he's just not going to be somebody who overpays, in his estimation, for anything. He's not desperate to do things, and will be there when he thinks the prices are right.
So let's start with the biggest headline from the video. Warren Buffett is not backing Donald Trump's market tactics. At all. What happened was, former President Trump reposted a video on Truth Social, which itself was a repost from a user on X, formerly Twitter. In that video, the creator claimed that Trump was playing chess while everyone else was playing checkers, suggesting that Trump was deliberately crashing the market to force lower interest rates and other supposed benefits. Pretty bold statement, right? The video even went as far as using clips of Warren Buffett, with a voiceover saying that Buffett praised Trump's economic moves as the best in the last 50 years. But here's the problem. None of that is true. Berkshire Hathaway wasted no time shutting that down. They issued a very clear, very direct statement saying all those circulating reports on social media, whether it's Instagram, TikTok, or X, are completely false. That clip of Buffett was taken out of context, and he hasn't made any recent comments on the market, on the economy, or on tariffs. Nothing. In fact, Becky Quick, who you heard in the video, confirmed that she personally spoke with Warren Buffett. He emphasized that he hasn't been talking to anyone about market conditions, and he won't be making any public statements on the economy until the Berkshire Hathaway annual shareholders meeting, which happens on Saturday, May 3rd. So if you see anything floating around on social media claiming to be Buffett's view on current economic events, you now know it's not legit. But let's zoom out for a second. This isn't just about misinformation. It's about how Buffett handles uncertainty. And this is the part of the video that I think really deserves some attention. Scott Wapner, the CNBC anchor, makes a great point in his follow-up to Becky. He brings up how well Berkshire Hathaway has navigated this current market turbulence. They're actually up 11% year-to-date, which is no small feat considering how volatile things have been lately. And here's what's even more fascinating. Berkshire is still sitting on an absolute mountain of cash. We're talking over $300 billion in liquidity. Why? Because Buffett doesn't believe in rushing. He's famously patient. He waits for what he calls the slow pitch, the obvious opportunities where prices are truly attractive, and he can make a move that offers long-term value. Becky reinforces this too. She says Buffett's not trying to time the market, and he never has. Instead, he knows when things are overvalued, and more importantly, he knows when they're not. And right now, with the S&P 500 down over 12%, and with continued losses piling on, we might be approaching that moment where some of those slow pitches finally start showing up. So what does that tell us? First, Buffett's strategy is still the same. Sit tight when prices are high, and don't overpay just to be part of the action. He's never been afraid to miss out on short-term gains if it means avoiding long-term losses. That's why his portfolio often looks boring to outsiders, but his track record speaks for itself. Second, he's quietly watching for value. Even if he's not saying it publicly, the very fact that Berkshire still holds on to so much cash tells us that he doesn't see enough of it yet. But when prices drop far enough, you better believe he'll strike. So, to sum it all up, the video you just watched is a perfect example of how misinformation can spread fast, but also how fast people like Warren Buffett are willing to act to shut it down. It also shows us that even when he's not saying much, he's still teaching us about discipline, patience, and how to approach investing with a long-term mindset. Buffett isn't interested in clickbait headlines or short-term market noise. He's watching, he's waiting. And when the moment is right, history has shown us that he'll move in a big way. As investors, whether you're just starting out or you're a seasoned pro, there's a lot to learn from that approach. Don't let the noise guide your decisions. Look at value, understand the cycles, and like Buffett, wait for that perfect slow pitch. Thanks for watching. If you found this breakdown helpful, make sure to hit that like button and subscribe to the channel for more insightful takes just like this. Drop your thoughts in the comments. Do you agree with Buffett's strategy? And how do you see the current market conditions playing out? Share the video with your friends. Catch you in the next one.